Welcome, dear traders. You are watching a recap of the Asian session. Stock indexes rose overnight on Wall Street amid expectations of strong earnings reports by tech companies. Market sentiment in Asian markets was also upbeat. The S&P ASX 200 index jumped by 0.7%, while the Nikkei hit a 4-week high. As a rule, stock markets show a weak dynamic in August. However, this time Asian stocks are moving against the seasonal trend. Market sentiment is driven not only by overseas news, but also by internal events. For instance, stocks react to news about the possible stimulus measures by China's government or the Reserve Bank of Australia's rate decisions. The Bank of Japan's commitment to a dovish stance is beneficial for foreign investors. As long as it sticks to an ultra-low stance, Japanese shares will remain quite attractive for traders. As the private surveys have shown, manufacturing activity at Asian factories decreased in July. And this happened because of the slowdown in global economic growth and the weakness of the Chinese economy. Its recovery still looks fragile, and the US economy, on the contrary, is strong. Let's see what is happening on forex. The US dollar index rose to 102.10 in the morning. It resumed an upward movement yesterday after the release of moderately positive reports on business activity in Chicago and Dallas. These regional indicators showed growth, confirming the stability of the US economy. Despite aggressive tightening, Chicago Fed President Austan Goolsbee did not rule out further tightening yesterday. He noted that the regulator is walking the line pretty well on bringing inflation down without causing a recession. Given the stable economy, demand for the US currency as a safe haven asset is also growing. The US dollar advanced to a 3-day high, moving in the upward range of 101.80 and 102.10 in the Asian session. It may approach new highs following the JOLTS report as well as ISM PMI Manufacturing Index. The US dollar rose significantly versus the yen, and the dollar-yen pair declined to a 3-week low. Bears are tightening their grip on the yen because of several reasons. The yen has been depreciating since Friday, when the Bank of Japan kept the key rate unchanged. A rally of the US currency is also bearish for the yen. The pair was quite volatile, moving in the green corridor of 142.20 and 142.80. In the Asian session, the yen traded slightly below the resistance level of 142.80. A cheap yen boosts the attractiveness of Japanese stocks, as it was inexpensive to borrow. It became a mainstay of a capital market funding for years. That's why Japanese stocks are increasingly popular. The authorities kept the critical levels of the yen under constant control. Japanese Finance Minister SHINICHI SUZUKI again stated that he will closely monitor the movements of the foreign exchange market. The Japanese government has a powerful tool at its disposal: huge dollar reserves. It may use them to stabilize the exchange rate of the national currency. For example, last year the government intervened several times buying the yen and lowering its rate versus the US dollar. The Bank of Japan also buys government bonds and increases the liquidity of the Japanese currency. A fall in the yen against the US dollar facilitates Japanese exports, especially in the automotive sector. 3 years ago, when the global manufacturers faced a shortage of chips, the Japanese auto industry had a stockpile of them for several months ahead. Over these 3 years, its chip inventories have only risen, and Japanese cars are popular all over the world. Demand for them is constantly growing. Therefore, the withdrawal from some markets, such as the Russian one, will lead to sales to other regions. Moreover, a large percentage of deliveries to Russia were used cars, not new models. In the Asian region, market sentiment largely depends on the Chinese economy. However, in the morning, traders were focused on the Reserve Bank of Australia's rate decision. The regulator kept the interest rate unchanged, weakening the Australian dollar. In the Asian trading, the Aussie fell to a 4-week low, moving in the range of 0.6630 and 0.6640. Given that inflation turned out to be below forecasts, such a decision is quite justified. So the Aussie declined even despite rising oil prices and the risk on sentiment on Wall Street. It slid into a downward channel of 0.6625 and 0.6725, almost erasing a 0.87% increase in July. The Kiwi also faced bearish pressure. It seems traders are getting rid of risk assets due to a rally of the US dollar. As China's economy is showing no signs of a beyond recovery, the Kiwi has extended losses in the Asian session. It steadily declined in the range of 0.6153 and 0.6219, ending the session at 0.6160. And that's all for now. Hit the subscribe button and stay up to date with the latest market news. See you soon!